Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure to ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending August 26, 2022. Looking at the indexes for the week, the TSX, S&P 500, Dow Jones, Nasdaq, and Russell 2000 were all down this week, mostly due to a drop on Friday following Jerome Powell's speech from Jackson Hole, promising to be tough on inflation and continuing to raise interest rates in the US. Jerome Powell also said that a recession is inevitable, with a warning to investors that there's going to be more quote-unquote pain. Gold and oil were up for the week, however. On Tuesday, OPEC has announced it may actually cut oil production, which has led to the oil price increases. High energy and food prices are worrying consumers on both sides of the border, causing a low consumer confidence number. Consumers are delaying discretionary purchases, for example, and spending less. The US consumers have less debt than Canadian consumers also. There's another 1 to 1.5% interest rates priced into the Canadian bond market, but cuts are expected next year as the Canadian Central Bank is forced to cut rates late in 2023 for the possible recession, especially when unemployment comes up. If a recession is to happen, it will likely be in 2023 thanks to the rate hikes in 2022. It's quite likely the inflation has already peaked. This week we had Canadian banks releasing their Q2 numbers. Bank of Nova Scotia reported, and their interest revenue was not as high as expected by a penny per share, nor was their interest margin, and neither is the foreign income. The trading revenue was down also. The stock pulled back 5% on Tuesday and 2% on Wednesday. Also, the economy is slowing and the bank won't release the loan default provision/reserves, still seeing some risks in their loans. Their loans may not make as much money going forward as previously either. National Bank exceeded expectations and grew its various units on Wednesday, and Royal Bank had a miss. Investment banking had a weak result and missed profits, and raised their bad loan provisions, noting a risk in the mortgages. CIBC and TD beat their estimates for Q2 reporting. Canadian job vacancies increased by 3.2% in June for over 1 million job vacancies. This will enable the Bank of Canada to keep raising interest rates, since the economy is obviously doing well and the resulting wage inflation needs to be lowered. The U.S. weekly jobless claims fell to 243,000 this week. And looking at the rest of the world for little bits and pieces, experts are expecting the price of energy to go up 50% in the UK and face inflation in double digits as high as 18%. Japan said it is looking at restarting some of its nuclear power plants and potentially building more, so uranium producers got a positive bump. As China reduces the lockdowns, it is going to increase its oil use and increase its price. Speaking of China, there's an agreement with China over audit inspections for US-listed ADR companies, where SEC inspectors are reviewing the audits, and there will be inspectors in Hong Kong checking the audits to ensure compliance on a company-by-company basis. The positive news raised ADR stock prices. The inspections are supposed to start as early as September. Looking at next week, the earnings today, Tuesday, is Bank of Montreal, Baidu. Wednesday is Laurentian Bank. Thursday is Broadcom and Lululemon. And Friday is DocuSign. Next week's economic events are on Wednesday will be the Canadian GDP information, with a 4.5% annualized quarter-over-quarter growth expected and a 0.1% month-over-month growth expected, which will give Canada a confirmation of whether we are in a recession. As I said, it's not expected that we are. On Thursday is U.S. jobless claims, and Friday is U.S. payroll information, which is an indicator of whether the U.S. is heading towards a serious recession, with the job numbers going badly and people not being able to spend as much as they otherwise would. That concludes my thoughts and look at the previous week. If you have any requests on what you'd like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.